According to the findings of a 2024 survey, 7 in 10 general insurance compliance professionals said they'd seen the burden of regulation increase. The research from REG Technologies also found that 2/3 thought that red tape was slowing down the creation of new relationships. Hello, my name is Jonathan Swift and welcome to this live interactive webinar, Easing the Regulatory Burden to Allow Insurers and MGAs to Prosper, brought to you in association with REG Technologies, where a panel of market experts will discuss the challenges insurers and MGAs face in keeping on top of regulatory compliance and how this could be eased by the use of new tools and technology. Now, speaking of my expert panel, I'm delighted to say I'm joined by Victoria Slade, Head of Sales at REG Technologies, Steven Folkard, the Chief Risk and Compliance Officer at the Jensten Group, Zoe Parsons, Marketing Manager at REG UK, and Richard Turnball, Managing Director of Collegiate Underwriting. Welcome, everybody. Now, as I mentioned, this is a live interactive webinar, which means you, the audience, can take part. You can do that by asking a question for the panel at any point by using the tab on your screen. Use the tab, ask your question. We'll come to these later on in the webinar. So, Steve, I'll come to you first of all. There have been quite a lot of regulatory changes recently, but which recent regulatory changes have had the biggest impact on insurers and MGAs in terms of the workload in your view?
So, in terms of insurers and MGAs or insurance brokers that are within the enhanced scope SMCR regime, they'll have been wrestling with the Digital Occupational Resilience Act, which comes into force in April of this year, which requires them to enhance a lot of the controls that they already have about cyber and IT and outsourced third-party services. But in terms of things that impact broking MGAs and delivery to customers more, the main regulatory changes that have had an impact over the past 12 months will be the multiple occupancy buildings insurance changes, which made widespread changes to disclosure for leaseholders via freeholders in the property insurance market, and also the ongoing requirement to spend a lot of time meeting the requirements of the fair value regulations that the FCA have put in force, which we know are consuming an extremely large amount of resource in the industry and have the potential for that cost to be passed on to consumers as well.
Richard, would you agree with that?
Absolutely. I think the fair value assessment and consumer duty is taking up a lot of time. But I also think that good firms will be doing a lot of those processes already correctly. I think it's creating more work and more time and more resource for those firms that aren't acting properly. I mean, ultimately all we're asking here is to demonstrate that you're providing a good product that offers value and that your distribution network isn't about generating commission.
Zoe?
Yeah, I think one thing that we do need to acknowledge is the work that's been done, obviously, but I think especially with the submission of board reports recently, I think one of the identified weaknesses was the data acquisition piece, collecting it throughout the whole supply chain. And I think, standardising documentation, etc., is something that, as a market, we all need to focus on.
Victoria?
Yeah, I think I'd echo everyone's points. Fair value product governance, for sure, is the biggest thing that I've encountered. And there's two kind of key parts to that. The first is trying to collect and acquire that data, because of course we know that within kind of insurers and MGAs, the responsibility is not only to gather that data from your direct agencies, but also every node of the chain. So how do you reach every node of the chain? And it's kind of bordering on impossible. And then the second key part is it's all very well acquiring that data, but once you've got it, what do you do with it? And what tends to happen from my experience is it's coming back in various different formats, whether it be PDFs, Excel, Word. How do you actually extract that, analyse it in a meaningful way? So I think something that we offer as a solution is solving two of those problems. Our exchanges feature allows you to reach every node of the chain and equally request that in a singular format, to receive it back in singular format, and then assess it accordingly. So again, I think those 2 points, I don't know if that's something you guys would resonate with as well.
Steve?
Yeah, I would resonate with that. And one of the questions that I think probably lots of the people listening to this today will be asking is, what happens to all of that data? Because we've got multiple collection of the same data by thousands of entities. I mean, our MGA has 2,000 sub-brokers, for example. They're all required to do their own fair value assessments. So they're replicating that process across 2,000 in our case, and thousands of firms across the industry collecting largely the same data from the same insurers with the same target market statements. So horrendous duplication enormous duplication of cost and inefficiency across the industry. And my question would be, what's that data actually being used for?
Well, we might come to that later. Zoe, I mean, what impact have all these changes had on the seemingly simple tasks like, say, onboarding a broker, and how are these being managed?
So as part of the research that we undertook last year, we identified that 70% of insurance firms all believe that regulatory and statutory obligations slow down starting new relationships. That was also up by an average of 47% from 3 years ago. So obviously these figures are concerning. You know, it indicates organisations are struggling to meet demands, resulting in missed revenue opportunities. And I think there was also, as expected, a clear correlation between kind of the size of firm and the capacity they have to maintain this compliance. If you think about an MGA, for example, as part of the onboarding process, they typically send out an application form, you know, to be completed by the broker, could be tens of pages long, you know, including finance information, directors, data protection, UBOs. You know, once that's completed, you've got to undertake all your due diligence checks, as well as sanctions. And I think, you know, the data's fragmented, teams are siloed, and, you know, something that could happen, you're not identifying that because you're doing these checks periodically. And I think there's also a funny stat that we identified a couple of years back, that when issuing a TOBA, it actually can take around 90 days to complete this process in total. So I think everyone can kind of resonate that it's a completely inefficient process and you're missing revenue opportunities from the outset.
Richard, as a representative of the MJ community, does what Zoe said chime with you?
Yeah, I think so. I think we're quite lucky at Collegiate in that we've got our own internal bespoke IT system, but IT resource is an issue, and scraping data in different formats is a real problem for us. I mean, we have 30 years of incredibly detailed, great data, but trying to find specific issues can be a real issue.
Steve?
And think of the duplication in that process, Richard. So we've got 2,000 sub-brokers. I'm sure you've got a very large number as well, and so will lots of other MGAs in the marketplace. And they're validating doing due diligence on the same people multiple times in the same marketplace. It strikes me that in the GI marketplace as a whole, we're well behind online and AI-enabled validation in terms of other industry sectors, and there could be a central data repository, which the regulator could even use, that would provide access to that information in one place for one time and make it available to everyone that requires it, rather than each individual firm having to replicate the same process to due diligence the same broker in multiple places.
Victoria?
Yeah, I mean, I think whilst what you're saying is right, every kind of business will have different appetites for risk, right, and what they're actually collecting will vary. I think that the two key parts is we know that onboarding a new agency takes time. Initially, the due diligence, we did some research a couple of years ago, and they estimate it takes between 35 minutes to an hour to create a risk profile, and that's just acquiring the due diligence, let alone the point you made around TOBAs. And I think from speaking at the market, these firms are culling their network because it's simply not viable to maintain, you know, that network of brokers because of the FCA expectations. So that's happening, which is unfortunate because it's affecting routes to revenue.
So Zoe, I mean, this has already been touched on, we're probably looking at expanding now, but how do you see insurers and the MGAs managing these increased volumes of data that we've already talked about that must be collected, you know, as asked by the regulator, and how are these analysed and reported to remain compliant and easily auditable?
So as part of the research as well, unsurprisingly, most processes are still quite legacy-based. Spreadsheets actually accounted for 40% of the market in terms of how they're actually continuing to do this counterparty due diligence on an annual kind of basis. You know, review of trade partners are periodic. Unfortunately, only 25% of respondents actually review their partners on a continuous basis, as in they've automated the process. You know, I think as well it's especially true, like I said before, for onboarding, smaller firms as well, they don't have as much capacity to maintain these checks, so therefore they're also missing revenue opportunities. I think the operational costs, they're eating into profitability, and at the end of the day, you know, if you're not continuing to do these checks on a continuous basis, you're only going to be affecting yourself and also at the end of the day the end policyholder.
Steve?
Again, there's a lot of manual process in the marketplace because a lot of smaller firms in particular still operate legacy platforms, large reliance on spreadsheets, as Zoe said, and in some cases probably think that a manual solution is cheaper than operating an automated solution. I think there's economies of scale there, so you'd expect larger firms to actually be operating more automated solutions and developing them. But if you look at our own group, where we've consolidated and acquired a large number of firms over the past couple of years, every single firm comes with its own variants in terms of platforms. So some platforms very easy to integrate and automate, others less so. And that's always going to be the case because the average broker in the UK is a small to medium-sized firm, not a large international or global.
Richard?
Yeah, I think we're guilty of a lot of the issues that Zoe highlighted there. You know, we do, it's a continuous process conducting due diligence on our business partners, and we still do a lot of it manually. And we're certainly very reliant on the FCA doing a lot of it because these are all FCA regulated firms and they should meet certain base level standards that the FCA is monitoring. So I think, for us, it's really an IT resource issue.
Victoria?
Yeah, I mean, I think you guys have covered, for the most part, the issues, but we've already spoke about the challenges around getting the data, collecting it, analysing it around fair value product governance and the challenges around that. Now, we know in reality that new legislations are going to come in. You know, the regulatory body, i.e. the FCA, are going to put even more enforcements in place, which means it's going to be even more challenging, especially when, like you've just referenced, you're using manual means to actually acquire that data. So I think unless you have tech, it's going to be impossible to keep up to speed with what they want to see. It's not unusual. We will have firms that will come to us directly, reactively, I suppose, but because they've had an audit, and off the back of that audit, they've been told in no uncertain terms, you should be doing this better. I think we're seeing more proactivity in that space because they realise the sheer amount of data is going to be impossible to collect. But yeah.
And Steve, I mean, building on this, I mean, in terms of the kind of staffing and the internal resource you need, I mean, how do you see companies managing this ongoing and also the new requirements there? I mean, in terms of, you know, your internal resource and staffing, what are you doing in that sense?
Well, especially with my role, I would simply say you don't have a choice.
Yeah.
You have to do it. It's a requirement of the regulations. But in fairness, if you look at what the fair value process is designed to achieve, all the things that should mean that fair value was already being provided to consumers were there before the fair value data exchanges ever came in. You know, product governance required the vast majority of things that happen and are designed to happen through a fair value process were already there. The consumer duty replicated an enormous amount of what was already in prod and firms would have been expected to do. So let's be clear, I think fair value is a large data collecting exercise, but the value that it actually adds for me is yet to be seen. How many people have ever seen an insurer statement that says their product doesn't provide fair value?
Richard?
I haven't seen one.
Yeah, I think in terms of staffing, where we're seeing the major impact is in the compliance departments of insurers. You know, as Steve said, the majority of the market is SME driven, and we've got tight margins, and we want to make a profit. Whereas, you know, we're all entrepreneurial and dynamic, whereas insurers are less inclined to be that way because they're large organisations, you know, super tankers that take a long time to turn around. And there's a self-perpetuating compliance industry that staffs itself up, gold plates a lot of these compliance directives, but doesn't really take into account the need to do business and to be efficient. And I think that's really the negative impact we're feeling in the MGA sector.
Yeah, Victoria?
Yeah, I mean, I think in terms of staffing and resource, that there's simply not enough. They try and get teams or FTEs to do the job, and it's what we've coined intellectual waste, because, you know, you've got people literally searching databases, trying to gather information, and if you think about it, you know, as soon as you've gathered that information, it's redundant because it's out of date. So it's not even something that you can rely upon. So yeah, in terms of people, if we know that these expectations are going to continue to increase, it's just not viable in terms of cost to these businesses.
Steve?
In terms of the data that's being collected, I'd have a challenge that would say what would add the most value for a regulator to really be able to see where consumers are being impacted. Because if you say fair value looks at price, features, exclusions, limitations, and the overall cost of the product, the one thing it doesn't really pull through is claims experience. And an insurance product really stands or falls on its ability to do what the customer expects it to do, which is to settle a claim under the terms of the policy when it's due. Now, the FCA have done quite a lot of work on gathering claims data across various market sectors and publishing it. But if you wanted a more valuable process, it would add value to see how products are really performing actually, rather than on paper in a fair value statement, ask people to share more claims data performance. Now, some insurers will. An awful lot, as you can imagine, won't, for reasons of competitive advantage and worrying about what that would mean. But I think that's where the real key to understanding the performance of products lies.
Zoe?
I think as well, just going back to the workforce part, I think one of the common misconceptions is that, you know, you employ tech and it's going to replace jobs, which I think is completely misplaced. I think that, you know, tech's only here to empower and facilitate compliance teams to act more strategically, act more proactively. And I think when they work together, you know, the power of human connection with the tech is only going to benefit everyone and have a higher competitive advantage.
So Victoria, I mean, that's obviously the internal kind of angle. In terms of kind of insurers and MGAs engaging with external specialists and consultants, accountants, audit firms, how are you seeing that in terms of them managing the ongoing and the new regulatory requirements they have to kind of deal with?
Yeah, I mean, I think this echoes Zoe's last point about it's not one or the other. I think we shouldn't underestimate the importance of these external specialists. When you're looking at tech, for the most part, tech doesn't offer you advice, right? We're not a consultancy firm. We're not trying to be, right? So I think it's really, really invaluable to utilise external parties, such as accountants, compliance consultants, because of course they've got the expertise, and especially in a landscape that's quite confusing and unclear, you know, fair value product governance, I know we keep going back to, but it is unclear, you know, what does good look like? I don't think anybody to this day knows, but actually utilising a consultant that might be able to guide you with that, but alongside that, you know, they can give you the why and the what, but where's the how? How are you doing this, right? So I think having a combination of those external consultants alongside, you know, a tech that's actually going to fulfil those requirements is vital.
Richard?
Yeah, I think a lot of it, it's not just gathering data, it's what you do with it and understanding it. You know, and the FCA can, you know, ask, you know, all sorts of questions about fair value and product governance, and we can send them all sorts of information, but if they don't really know what they're looking at, they don't really know what they're looking to get out of it, all the intricacies of the data being provided, they're not going to get any benefit from it. You know, and that's perhaps where external consultants or people with a bit more domain-specific expertise can add that value.
Steve?
The question about what data is used for is really important. The ability to collect it more cost-effectively undoubtedly should become more tech-driven. And I think there's a big hole and opportunity for tech providers to propose industry standards, as BIBA already have, for example, in the way that's collected and shared. Because in other markets and other sectors outside of GI, we've seen data initiatives that have been supported by the large firms to drive a common standard of data sharing. And that does one of two things. It makes it far easier for REG technology providers to actually align to something which they know a large number of people will buy into around a common standard, which makes it cost effective for them to develop. And it also means that there's a direct benefit for all the companies in the marketplace in finding that suddenly they're faced with REG tech solutions that have capacity to reduce their cost. Can that be driven by consultancy? Potentially, but I think it's more likely to be driven by a commercial interest that's shared across a number of large to medium-sized providers. An industry standard in data sharing in this space would hugely reduce costs for everyone concerned, in my view.
Victoria?
Yeah, I think the only other thing I'd add to that initial question is those firms that are using compliance consultants, for example. When I speak with firms and say, you know, how are you managing these processes? They'll say, oh, well, we outsource to so-and-so, whether that's a firm or a person. And when we say, but what are they actually doing? They don't know. And that's quite worrying, right? Because you're assuming and you're relying on these people to do things properly, but backs against the wall, you know, they should know. So I think sometimes there is a danger in purely, you know, relying on these consultants and not really having visibility over what they're actually doing.
Zoe?
Yeah, I mean, just to echo that, to your point, you're kind of outsourcing manual to manual, right?
Yeah.
So I think a joint up approach, you know, using the tech to power decision making and kind of drive data insights, but then using these expertise of consultants to really decide how you're going to be proactive about what you're met with.
So Steve, I mean, how are firms then, I mean, you talked about the processes and spreadsheets, etc., but how are firms looking to modernise the process and tools they use to handle regulatory work, and how widely used still are manual paper-based methods and spreadsheets there? I think you might have already answered that, but perhaps you could expand on it.
Certainly. The more complex the requirement, the more difficult it tends to be to automate it. But equally, the more common and standard the requirement, and the simpler, the easier it is to automate. So if we look at the scope for AI to answer a large number of standard compliance questions and to deal with relatively straightforward transfers of data between agents and insurers, or MGAs and sub-agents, I think that process in the end will be automated, and I don't think it will be that long. It'll be quicker with industry standards, but already you can do things like you can scrape standard questions, you can create a box of answers that will be then fed into a chatbot which can answer the vast majority of straightforward queries. I think the next step from that is learning AI, which will actually be able to develop interaction between the regulatory texts and people that want advice to actually answer more complex queries. I don't think that's that far away, and I'm sure that's already being developed by a number of firms in the marketplace. But the really complex data sharing that goes on with fair value is complex to solve because not everyone uses the same formats, methods of collection and methods of sharing, and that's why it needs an industry standard.
Richard.
Sorry, I keep coming back to that one.
I'd very much echo Steve's sentiment there. I mean, we, again, we have our own bespoke internal system which we try to develop to adapt to current, regulatory guidelines, to data requirements, but that's an ongoing IT resource issue, and as we all know, IT resource is becoming more and more expensive. And so it's constantly a question of trying to keep on top of it and keep ahead of it whilst managing the budget, because we need to make a profit. And so I would agree with the sentiments about industry guidelines, and an industry standard would be pretty good.
Victoria.
Yeah, I mean, I think in reality, when we speak with the market, it's largely paper-based, people-resourced, manual spreadsheet-based record keeping, right? And there's very few businesses that I speak to that have an all-encompassing tech solution. Very, very few. We don't really have any direct competitors, because what businesses tend to do is it will be very piecemeal. They might have the odd subscription, with a credit supplier, or they might get a download from the FCA every week. But it's also what they're doing with that data. It's all very well. Sanctions, again, another really good example. They're getting this data, but then off the back of that, there's still manual intervention required to actually do what they need to do with it. In terms of what we're starting to see, I think in the kind of hangover of COVID, I think it's the first time we've mentioned it so far, but in the hangover of COVID, and now what we see is a hybrid working environment, firms are catching up. As an industry in the regulated space, we know that insurance is analog, right? We're pretty archaic with the way in which they do things. They are slowly starting to catch up and become more progressive, and I think there is more of an appetite to explore tech. It's becoming more of a proactive, I suppose, thing to do, rather than being told that they need to do it.
Zoe.
Yeah, I think on that point as well, I think we should recognise that, for example, MGAs, I think, inherently they're way more proactive in their approach to tech adoption. They're more nimble, they have to be more innovative, and I think we are seeing an increased appetite for MGAs kind of being open to embracing technology. I also think that's true for startups, as much as sometimes they lack the capacity in terms of operational costs as well to kind of bring that tech on. I also think that it helps them from the outset to establish really good compliance foundations to kind of progress.
Just to remind you again about the questions. If you have a question for the panel, please use the tab on your screen. And a question has come through, and unsurprisingly, this is for you, Steve, because you keep mentioning about this standards. They basically ask, is there any other markets we could look at in terms of where standards have been introduced, so perhaps we could learn from? Because you do keep coming out to standards.
Well, thank you whoever asked that question. It wasn't a plant on my behalf, I promise. But yes, there absolutely is. So many years ago, the insurance industry in the life market had an issue with pension transfers. How is this related to general insurance? Well, pension transfers, phenomenally valuable, very high volume, billions of pounds moving backwards and forwards between different insurers. No common standard. The average time it would take you to move one tranche of your money to another insurer in the old marketplace could have been 6 months or even longer, just to move money from one insurer to the other, because of the amount of data that was going backwards and forwards in different formats between insurers. And a group of insurers realised this was costing them far more money than it should. Why? Because it lacked a common data transfer standard, and what they did was set up a group called REG, which was an organisation funded by about a dozen of the larger insurers, and over time that grew, to just employ people to design a common data standard. They designed a common data standard, they got approval from the regulator and the DWP to change how the whole process for pension transfers operated, and the average time that it took to make a transfer went down from 6 months to less than a month, and in some cases a fortnight. Swift money transfer, great for the customer, great for the insurer, significantly reduce their costs, and Origo virtually paid for itself just with that one industry standard created there. It can be done. No similar forum, as far as I'm aware, exists for GI, and I think that's an issue.
And how long did that take from beginning to end?
The whole process, about 18 months to 2 years. It was very complex, and a lot of people said, you'll never do it. But they did.
Richard, do you want to?
I just think in that scenario, what you're transferring is money from pension defined benefit schemes to the insurance sector. So the insurance sector had an interest in that money coming out. I think what we're talking about here is competing insurance companies sharing data, which would be a lot harder to get people to collaborate because they think they're giving away a competitive advantage. You know, I personally think our data is, you know, infinitely better than that of our competitors. I'd be a little bit worried about sharing that, if I'm absolutely honest.
Victoria, if we go back to the kind of technology and tools, I mean, what technology and tools are you seeing that are making the biggest difference to date in how insurers and MGAs handle regulatory work? And what documentation and documentation involved? And what are they looking for in the future to reduce the burden and become more efficient?
I mean, I think both parts of that question have the same answer, right? I think those firms that are thriving are embracing reg tech solutions or tech solutions that will encompass everything, rather than having these disjointed processes and doing one thing there, different teams, different resource. So I think, you know, in terms of what these firms need to be doing is they need to be not relying on spreadsheets, you know, having a centralised way of managing everything, not relying on people and not knowing what the cost is going to become, because as these legislation changes keep coming in and the expectations from the FCA continue to increase, then again, they can't keep just getting bodies because it's just going to become completely, you know, unfeasible in terms of cost. But yeah, I mean, in terms of documents and to that point, these firms also need document management systems. We still see firms that are sending out assessments, questionnaires, forms, TOBAs via emails, paper-based processes, right? And there's two issues with that. If there's a legislation change, let's say GDPR, right? You need to reissue 2,000 TOBAs to your brokers. How are you doing that? More often than not, unless you have a system that's going to actually do that centrally and in an automated fashion, you have to sit there, fill in that template to every single broker and populate each field with a spreadsheet that may or may not be 12 months out of date, right? So I think having document management systems to not only issue it, but also have a trackable workflow. So again, I mean, my answer to both those parts of the questions is RegTech.
Steve?
It still happens. There's even firms where manual processes sit alongside automated processes as well. And there's probably still a lot more firms that could benefit from automation if they truly understand the cost of what they're doing manually. I'd agree.
Zoe?
Well, I guess back to the question in terms of what has made the biggest difference, I don't think it's just operational efficiencies. I think you've also got to think about the wider business benefits, whether that's, you know, more time to focus on more strategic decision making, you know, you're being proactive instead of reactive to something that, you know, happened, like Victoria said, I don't know, a year ago, and you've kind of missed the mark. I think there's also more time to focus on faster onboarding. That only improves the customer experience and in essence, kind of quicker routes to trade, right, and revenue.
Richard?
Yeah, I know we have fantastic people in our company, but I also know that we're very guilty of a lot of the things Victoria just said there. We do make it a manual process. We do send out a lot of emails when that sort of thing happens. And it really, for us, is a resource issue. You know, we would quite often like to onboard new tech and new data handling techniques, but the process we had to go through can be a little laborious.
Can I say, Richard, I mean, how can companies foster and maintain a pervasive compliance culture across their organisation?
Well, I think what we need to do is recognise that compliance really is about consumer benefit. You know, all the things we've talked about today is ultimately delivering the right product to the consumer. And so really, if you want to foster that and you want to keep the cost of compliance down, you be better is the solution, isn't it? Now, I know that we're providing a good product that's fair, you know, that we're providing a product that provides value and are distributing, you know, we're not just generating commission for ourselves. But we also know that there are people in the industry that Steve's probably aware of that don't do that. And as a result, the regulator has to issue things like fair value assessments and consumer duty. Now, I don't necessarily think they're a bad thing, because that is going to be more expensive for the firms that are not doing that already to do. It's a pain for us, but we can do it relatively simply. And I think if the insurance industry as a whole doesn't want this sort of thing to happen. They need to self-regulate to a certain extent and call out the people who are doing it. If you're going to look at the regulator, they need to be more proactive. We all know, who these things are targeted at in the industry. The regulator should know that as well. And rather than wait for consumer detriment to happen, they should be far more proactive in rolling these things out.
Steve?
My view of how you set a good compliance culture is you set the right tone from the top. Leaders in business have a responsibility not to think of compliance as something which needs to be done separately from the way you run the business. If you're focused on consumers, you're designing good products, you care about the outcomes from your customers, and you care about the service you provide, compliance should naturally fall into place behind that. The larger your organisation gets, the more you need to monitor and oversee and be able to prove that that's happening, and that's a sensible regulatory requirement to have to do that. But if you have teams at the top and leaders in a business whose ultimate game is to deliver a service and product to customers that's better than your competitor, then good compliance tends to follow on from that as a matter of course.
Zoe?
Yeah, I echo that. Compliance definitely should never be second nature. I think it's something that should be embedded into the whole organisation. That comes with education, whether that's educating people on, regulation, whether it's educating the teams on the use of technology, but then also, if you combine the two, ensuring that, everyone has that kind of centralised repository of information as well as the understanding. And I think that's what's going to set the good compliance foundation and transparency across the company.
And finally, Victoria?
Yeah, I think those that work in compliance risk operations will know that when it comes to budget, compliance is always bottom of the pile. I think it's starting to change a little bit, and there's more of an understanding that it's not a pain necessarily. It can be a way of, we know that a lot of these regulations and legislation have come in as a result of bad practice to protect the consumer. That's why it's there. So I think if there's a greater understanding of that, rather than just seeing it as a necessity and a tick box exercise, and almost embracing that and collaborating with the rest of the market to see how they're doing it, and a willingness to actually do that will be the biggest impact.
Yeah. So again, let's remind you, if you have a question of the panel, please put them down, and we'll come to these between now and the end of the webinar. And building on again, I've got a question here which kind of builds on something we've been talking about competitive advantage. Is compliance, should it be seen something that you can build on to be a competitive advantage? Is it something that, by doing it well, doing it right, it is actually? Because there's another question about saying that some businesses just don't seem to pay as much attention to it because they don't think they're ever going to get caught. You've got kind of two ends of the spectrum there. I don't know, I'll come to you, Richard, what you think about that. Do you see it as potentially?
Yeah, it's integral, isn't it? I think Steve's point about it comes from the top is key. There's too much short-termism, and that's driven by the desire for profit and growth. The way you run a company that is successful and sustainable in the long term is you have a lot of happy clients, and then you provide them with value. And you're not just generating income for yourself. But unfortunately, our paymasters always want us to grow and make more profit, don't they, without looking at that. And that's the balance that the business leaders have to find. And they do have to set that culture, and they have to be prepared to push back. Asking people down the chain to do that is just unfair. That's why you're at the top. You should be strong enough to do that and set that culture. And ultimately, that will lead to a better company that's sustainable in the long term, rather than, and promote less market volatility as well.
Steve?
There's a lovely quote, and I think it's from the ex-director of the Securities Commission in the United States, that says, if you think compliance is expensive, try non-compliance. Because the cost of sorting something out is invariably far more than doing it right in the first place. I think in terms of cost, if you're lucky enough to employ really talented people with good knowledge and ability to get across the regulations, you can deliver competitive advantage for a firm. The amount of money you save in employing external consultants, getting independent or different advice, if you have people that really know their stuff, is definitely a competitive advantage. And I'm lucky enough to have a team with people like that in it. But then how you deliver that in a cost-effective way that doesn't burden the business with unnecessary bureaucracy, and you integrate it into BAU in as much of an automated way that you can, is really, really key. Because it's really easy, the more you know, to actually, if you're not careful, to burden the business with too much process, you've got to really make it seamless. It's got to be under the water. You've got to be able to collect your data in as automated a fashion as possible to generate the outputs you need, which if you're working in a good business will generally tell you that everything's going okay. You'll find things that you need to correct. That's a function of the process. But the more that process runs without manual intervention from other people in the business, the more cost effective a compliance function is.
Victoria?
Yeah, I mean, I think just to add to that there's two parts I think that I would mention. The first is reputational integrity, right? We're trying to get better customer outcomes, and if you've got really robust process in place around compliance, then you are immediately having that competitive advantage. So I think that's really cool, and I was going with that, but yeah, I think that's my kind of main takeaway.
Zoe, have you anything to add?
As well, just kind of going back to the onboarding piece, you know, if it's taken, could be 90 days, for example, to commence that new business relationship, or how many opportunities have you missed by that point, right? So I think that kind of speaks for itself in terms of if you want to increase trade, if you want to increase revenue, then, you know, do something about the, as people will call it, annoying compliance piece first, and just let that work in the background so you can focus on more strategic initiatives.
And another question that's come in, and I'll come to you on this, Steve. You've already talked about your great team there, but there's a question about, I suppose, about what makes a good compliance person, I suppose, ultimately. They're just saying, you know, we're talking about this technology and all this kind of stuff coming in. These people who might have been used to spreadsheets might be quite good at using spreadsheets, but how do they kind of come into this new age, I suppose, where REG Tech is, you know, just as important as using those spreadsheets?
Oh, what makes a good compliance person? You'll get lots of different answers to that. Some people would say one that isn't seen very often. The ability to make judgments under pressure, the ability to be able to deal with a lot of different and competing views in an empathic way without appearing directive. Working in compliance function gives you a great deal of power, but with that power comes a great deal of responsibility. It's really easy to wave a stick and say, you must do this because the rule says you must. But if you're on the receiving end of a message like that, do you really understand why and what the benefit of it is? So I always encourage people, and I've got folks who have a real knack of explaining why things need to be done and what the benefit of doing them is, rather than just telling people to do things. So less tell, more explain, more understanding, build the right culture.
Richard?
I think very simply, a good compliance person will understand how to apply the various regulations and rules that we all have to adhere to in a commercial way. You know, there's no point in us doing what we do every day if we're not going to make money. So you've got to find that balance.
And do you find that they're quite receptive to using like regulation technology, REG Tech, as opposed to perhaps how they might have previously done it? Just as
Yes, we're always looking at tech solutions that will make us more efficient. Simple as that.
yeah.
Yeah, I mean, I think there's I think lots of people, and somebody mentioned earlier about assuming that, you know, using people resource is going to be effective, it's cheaper, but actually the risk of non-compliance is more expensive, right? And I think it's impossible to replicate what a REG Tech solution or a tech solution can do with people. I think we've spoken a lot about onboarding, but also the ongoing management of your counterparty, so your brokers that you're trading with, right? If you're doing that properly, you would literally have to have someone sitting there 24/7, ensuring that partner you're trading with is still compliant, is still, you know, stable in terms of financial means. So yeah, I think, yeah.
So then kind of, again, building on this, and you've got your great teams here, is there anything the regulator could start or stop doing to make life easier for everyone involved in regulatory compliance? And Steve, I'll come to you on that first.
I think the regulator's got a lot of resource challenges at the moment. Because we have a large number of regulated entities and we're making various applications for different things all the time, we see ebbs and changes in the way that different parts of the industry are served. So a lot of focus has been put on new authorisations recently. So the FCA has significantly sped up approving changes in control, approving new authorisations. Appointed representative authorisations are still taking quite a long time, but generally that's an area that's improved. But then equally, we're trying to deauthorise firms as we merge and integrate firms into the group. And what we're seeing is that deauthorisations in the past few months have significantly slowed down. And if you can't deauthorise firms that have no money sitting in them, you end up with a rump of firms sitting in your book that you still have to report on, you still have to incur regulatory fees from, and you're waiting on the regulator to deauthorise them. And the normal SLA for a complete application is 6 months, and for an incomplete application, which requires one question to be asked on the application, it can extend to 12. I'd significantly like to see deauthorisations sped up, because it's creating additional cost for firms that isn't necessary.
Yeah. Richard?
I touched on this point Earlier, I think the regulator very much needs to be more proactive in their regulation. I mean, if you look at every regulatory initiative, or sorry, not every, but majority of regulatory initiatives that have come out recently, they're in response to bad practice. You know, why are we waiting 3 or 4 years to address an issue which we all knew was prevalent in the industry, and do it through a 300-page policy document? You know, it is not an efficient method of regulation, and we all have to dance to their tune. We have to do it at various costs. You know, there are things happening now as the PI market softens that are not within consumer interest, but we're going to have to go through that process, and there's going to have to be a bit of a shock to the system to get that addressed.
Zoe?
Well, yeah, I would echo that, and I think, you know, the regulator should then liaise with insurers, MGAs, consultants, you know, the market, to kind of identify what those risks might be and do something proactively about it before we kind of get met with regulation that we have to abide by in X amount of time and no one can do it.
Victoria?
Yeah, I think that, echoing what everyone said, I think industry collaboration is huge. You know, the FCA needs to be engaging with regulatory stakeholders when they're implementing these regulations, right? Because they're the ones doing it, they're the ones that understand it, rather than just putting something in place, nobody really understanding it. And then, I mean, one of the modules that we built into our platform was around supporting the pains on fair value and product governance. It took us quite some time to actually release it because we didn't know what good looks like, and nobody did. And I think that's a really good way of describing these legislations that come in, because they're just unclear. So I think when we're engaging with regulatory stakeholders, it just makes it much, much better.
So can I ask Victoria, I mean, simply, what does the future for REG Tech look like in terms of insurance?
Yeah, I think I said this earlier and kind of answered the question to a point. In the hangover of COVID, I've definitely seen a kind of marked increase in the willingness to explore REG Tech. So I think that's definitely something that's increased, and it's fantastic, because in a hybrid working environment, you can't, you know, look over your shoulder and chat to the person, you know, about X, Y, Z. So you need to have these centralised way of managing things, and REG Tech really is the only solution that's going to fulfil what's needed. I went to a conference, and there was a panel discussion actually, and I think somebody mentioned that they wouldn't be surprised if at some point the FCA mandate REG Tech or some kind of solution, because you cannot rely on people on their own, because it's human, you know, prone to human error. So my belief is that there is more of an engagement with or appetite, I suppose, to embrace technology, but also I think the regulator may, you know, in the next 5-10 years, actually enforce REG Tech to make sure they're doing things properly.
Zoe?
Well, I mean, the regulatory burden is only going to continue increasing, right? So players that don't obviously arm themselves with the best tools, you know, they risk literally just falling behind. I think as well, one thing to note is, like Victoria mentioned earlier, REG Tech providers are proactive in their approach of making solutions. So, you know, you identify a market need and we will adapt our solution to obviously adhere to that. So I don't think that, you know, companies that aren't embracing REG Tech or any sort of technology, I just, yeah, like everyone said, you're just kind of setting yourself up for failure.
Steve?
I think the market will rapidly embrace more tech, because the requirement to find cost efficiencies will mean that it has to. And smaller players who don't embrace that will run the risk of not being able to deliver the processes they're required to by the rules and regulations, which presents a regulatory risk for them. And larger players will just naturally gravitate to it because it's the commercially sensible thing to do.
And finally, Richard?
Yeah, I mean, it'd be quite interesting to see what happens. I mean, you know, we're in an environment now where employers are asking people to come back into the office more. And I think Victoria's point about COVID being a driver for a lot of this is correct. It'd be interesting to see whether people come back in the office will maybe stunt that growth a little bit. I think also, you know, there's no point embracing technology or consultants if you're not going to actually use it. You know, a lot of people do it to tick a box. You know, why pay that out if you're not going to listen or adhere to the service or the product you're paying for?
So kind of wrapping this up and bringing it around to the start. I mean, at the start of the webinar, I talked about the kind of the regulatory burden, and I mentioned the REG Technologies kind of survey and what you found in terms of these kind of compliance professionals and their responses. Are we optimistic that looking to the future, and when perhaps you go back and talk to these compliance people again, they will feel that they don't feel so much of a burden from regulation, whether it's for the use of technology or whatever? Are you optimistic in terms of kind of those people who are working in those compliance departments. I don't know, Victoria, whether you have a view on that.
Sorry, so am I optimistic in what sense?
In terms of the compliance people, are they going to feel, because of the use of technology, are they going to feel like less of kind of burden on them?
For sure, yeah. And I think, again, if we draw back on the question around what does REG Tech look like, I think there's a new breed of people coming in, right? The younger generation want to embrace technology because they realise that it's going to alleviate so much of that heavy lifting. We know that regulations are going to get worse. I say worse, but for better customer outcomes, right, and more competitive advantage. But it is, and I think you cannot rely on people. And I think there's a reluctance mainly because insurance as a whole, and I'm generalising here, tends to have the older generation involved, and they're very reluctant to move away from legacy processes. I've gone to offices and they are still storing their tobas in filing cabinets. It's just not feasible anymore, right? And this new breed of people that are coming in, they want to embrace tech, and we're certainly starting to see that. So I'm optimistic that, as retirement kicks in for some of these people that are so stuck on these legacy processes and manual means, so will the new generation, and therefore embracing technology.
Richard?
I'm sort of wondering whether the societal move towards deregulation and the removal of red tape will actually, be a step back in this direction. It almost always that has resulted in consumer detriment across any industry, and I think that there is a little concern that this push towards growth is going to have is going to result in some scandals that we might be dealing with in a few years.
I'd actually have a question about that, about the kind of pushing back on the government going for growth. Is that going to have an impact? So you're touching on that.
Well, I mean, you only have to look at, this goes in cycles, doesn't it? Regulation, red tape, processes, they do stunt growth because they take time. And then, we're talking about how REG Tech can hopefully facilitate that. And then what happens is there's a great big push towards deregulation. No red tape. And unfortunately, human nature is such that people put profit and growth before the service provided to consumers. It comes back to short-termism and the culture being set from the top. So, we're destined to keep going around in this cycle unless there's a fundamental change to the approach here.
Steve?
We know that unravelling regulation always takes longer than everyone expects, and Richard's right, we have been through those cycles before. I think in the meantime, and talking to Victoria's point about a generation who are probably in their latter years running their own businesses, I think there's a lot of businesses out there, particularly smaller ones, that are struggling with the current increases in regulation, whose path to retirement is probably within the next 5 years. And one of the easiest ways for those firms to deal with that is to go hand in with a firm like our own group or one of the other larger firms who can obviously provide really great centralised services and more automation in a way that means they can lift that burden from the smaller players. So I think the current regulation will be a natural driver of far more consolidation because economically it makes sense for those firms.
Finally, Zoe.
Well, I think, we've seen material efficiencies in functions like, claims processing, risk analysis, etc. So I think ultimately compliance needs to catch up.
There you go. That's a great kind of line to end on. So I'd like to say a big thank you to Victoria, to Steve, to Zoe and to Richard. Thanks very much for your time.
Thank you.
Thank you.
I'd also like to thank you for watching and asking your questions. But until the next webinar, it's goodbye from me. And a big thank you to REG Technologies. Cheerio.